Yo guys, welcome back to another video. Um Today I'm just gonna be showing you how I personally utilize fair value gaps and implied fair value gaps to stay confident about my overall price direction bias, right? Um this does this actually I found that this actually works on pretty much every time frame, right? Every time frame possible to man or whatnot, right? But this is not per se a way to identify bias. It's something I actually utilize to stay in sync with my overall bias, right? Which is right now on our features is that I was looking at what's this S&P 500, right? If you pay attention, it broke buy side, just buy side here around 11:45. I was actually kind of expecting price to potentially target sell side here in this 1 hour fair value gap, which is right here, and continue bullish, right? But it seems like it might have respected this one right here with sell side right here. Because overall my directional bias is bullish because we've got this 1 week gap here that I'm still waiting to fill, because I personally do not pick highs or lows or tops or bottoms. In other words, when price hits buy side liquidity, I'm not expecting a reversal, right? It's still possible, but I'm not expecting it, if that makes any sense. That's not what I'm gonna be filtering all my trades towards, if that makes any sense. So going into there, right, overall my bias is bullish on S&P 500, US 30. Let me go back to the weekly time frame. On US 30, just got a violation of this highs right here. Still yet to see how price is gonna act within this zone, and if we're gonna get a potential retracement to this one here. Might expect it in the next few weeks. Yeah. But right now, personally, I'll say I'm expecting price to pretty much fill this fair value gap, this weekly fair value gap right here, and potentially target this auto block per se. This one right here. But that is still yet to be seen. And on the week on S&P 500, just went through this implied fair value gap right here, which price seems to be treating it as a form of support to continue bullish, targeting the 1 week, the 50% CE of this week right here. Still yet to see if price is gonna retrace or be corrected within this zone, but my initial target is this auto block range here per se, this one right here. But currently, if we pay attention, just like US 30, we are still within this zone right here. So pretty much this fair value gap high and this 50% wick zone, we still yet to see how price is gonna act. But right now, that's pretty much my draw on liquidity. So that's basically my bias for day trading. I'll pretty much be only taking trades to the upside. So right now, going to the lower time frame, no, we're still on NASDAQ. Bearing in mind that all these pairs are correlated pairs though, so therefore we're still expecting pretty much the same thing to form in all of these pairs. Pay attention, we've got buy side here violated, buy side liquidity on the top, okay? Buy side liquidity. Fair value gap was penetrated right here. So I'm gonna use this as a form of support to continue bullish with the buyers, with the bullish buyers. We've got an insufficient gap right here, just within this bullish candles right here. So this is pretty much my draw on liquidity for NASDAQ, right? So overall, with all three pairs, we are pretty much bullish, or I per se have a bullish bias. Same weekly time frame, still yet to see how price is gonna close within this week right here. The next week I might be anticipating a potential drop back into this favorably gap zone right here, just to continue bullish if we do not manage to reach these highs right here. So now going into the 1 hour, step by step building blocks, on US30. When US30 price managed to violate this high right here, and S&P 500 hadn't. So I'm still currently expecting price to violate the highs right here, but all my trades will be pretty much executed on the AM trend, which is right now it's 9:15. By 10 a.m. the AM session begins, or the AM trend begins. So if price penetrates the zone here, buy side, I might expect a retracement to this order block right here. I wouldn't regard it as a mitigation block because it has violated 50% of this bar right here. But since my bias is bullish, I'll be expecting price to pretty much do that if we violate these highs. But if the highs have not yet been met when it's due time, then sorry, just yawning. We're gonna see how price delivers. S&P 500 has not yet violated this high right here. US30 violated them early in the morning, 2 a.m. beginning of London, and then went back to violate this lows right here. So it seems like these lows have been respected. Right now we on NASDAQ. Got the high right here. We've got the most obvious sell side right here, but I'm also recording this one right here because it is the London sell side liquidity. So let's put it like that. Okay, so I'm not expecting price to reach back here, right? And we've got this fair value gap right here, which seems to have been respected because price only pierced through it, but didn't close below this fair value gap low. So this fair value gap has met its time. Therefore, it did or has done what it was meant to do. That makes any sense. So pretty much how I utilize and stay in sync, or how I personally stay in sync with my bias, short term and long term, but per se on day trades, is that I expect fair value gaps in a specific price range to stay unfilled. And when I say unfilled, I mean price should not close below its low if we're bullish and above its high if we're bearish, right? And this is a clear indication of that. So if you are, in simple terms, if you are to pay attention to this range right here from this low, we can even mark out to this low right here, to this buy side here, to this current high right here. If you're to pay attention, on lower time frame, we're expecting to see fair value gaps respected to a somewhat degree. The most highest probability ones will be within the discount zone of this initial range, meaning that there's pretty much anything below this range right here as discount. So therefore, the highest probability longs will be executed within this range right here. And then if you want high probability setups within a premium zone, you divide it in half, and then the discount area will be the highest probability zone to be executing longs. So in simple terms, within this bullish range right here, I'm expecting price to respect the fair value gaps. The most obvious ones, which would be pretty much this fair value gap right here. This one here was not respected, but this one here was right before this displacement right here. This displacement low, right? This one right here, the most obvious ones. I'm regarding that as a confirmation for bullish, just to remain bullish. As soon as we got a breaker here, we're not expecting price to close below this breaker. And if you pay attention, we have an order block here. Like this. We have not an order block, a fair value gap right here that price respected. It didn't even target it. So therefore, this one remained respected. We have this one failed here, but it didn't remain respected. And when price doesn't respect these fair value gaps like this, right? In other words, we have, which one? This one right here, that price managed to close below, right? We have this one's right here. We have this one right here. It's minor, it's not as visible, but it's there. When price is moving like that, my first indication, or the first indication that I see, is price potentially targeting an order block just right below the fair value gap, if that makes any sense. In other words, when you pay attention, this wicks right here, price managed to wick below this fair value gap, targeting pretty much this order block right here, if that makes any sense. So I pretty much still remain bullish until price closes below 50% of these order blocks. In this case, this zone right here, 50% of an order block is the order block min threshold. So I'm expecting price not to close below here. So when price had this right here, I'm expecting price to not close below the fair value gap right here. So pretty much price should stay within this range right here. Same as this one here. I'm expecting it to stay right above this fair value gap. This order block right here. And then I would regard this as a mitigation block because it managed to not close below 50%, the mid threshold of this right there. So you got this order block. this fair value gap right here failed, so price closed below it. Therefore, I'm expecting price to respect this range right here. And personally, I tend to mark out executive downside candles as one full order block via the bodies, if that makes any sense. So I'm not expecting price to close within 50% of this range. If you're less comfortable with that, you'd mark out this range right here, which 50% would still be within the same zone per se. So pretty much if a fair value gap is violated, I'm expecting price to respect fair value gaps, right? And this is always obvious on every specific trend, right? It's just that this one is not as clear as I would personally like price to be, but it's there, Right now we can go into another chart. Let's try out Forex so I can give you, in this one, S&P 500, we've got this bullish range right here, right? I'm expecting fair value gaps to remain open. Therefore, price should not close below the fair value gap low. And if it does, price should not close within the 50% range of its order blocks, if that makes any sense. This is our lowest low. This is our high, change of character or displacement or whatever you would like to call it. Got price here, so price should not close below 50% of this order block right here. We have this favorite gap right here in which price didn't visit. We have this one right here in which price didn't visit it but did not close below. We have this one right here, right? We have this one right here. And you also would utilize this as scalings when you let's say you took a long within this range right here, wherever within this zone, right? You utilize price revisiting these favorite gaps as pretty much executions to remain long, right? Bearing in mind that we are within the lowest point of this bullish range. And this was pretty much yesterday's move for the six sister profile, which is this two highs right here. This one is the London high, much right here, 430, the London kill zone or London session high, and this was the 1 hour breaker. US 30, if you pay attention, US 30 violated the highs first by 9:30, and then S&P 500 followed right here, violating it or hitting it by 10.5, and then NASDAQ was the last one, hitting it by 11:45, as you can see. So going back into S&P 500, right? So every time when we're bullish and we have a fixed bias, we're expecting price to pretty much respect this favorite gaps and not close below the lows. And if price does, then it's pretty much indicating that it's potentially targeting an order block below it. Even mitigation blocks are regarded as, not mitigation blocks, propulsion blocks are regarded as order blocks, right? Because they do not close below 50% of the order block in which they tap. In other words, this one right here did not close below this one, if that makes any sense. So as long as you have a clear bias on direction and where price is pretty much heading to, right, you are going to be using fair value gaps as a form of price retrace. You expect price to retrace back into those zones to pretty much fill in some orders and then continue going its initial direction, right? So paying attention right now, we've got S&P 500 bullish right here. Target is just about to violate these highs that were violated by NASDAQ. US 30 early in the morning right here, right? So as soon as S&P 500 violates the high like this, we're expecting the same to happen with NASDAQ, right? I believe this is called the Six Sister Consolidation Profile by ICT. A buy side right here. But a video was provided about that yesterday. So if you found this information helpful, please be sure to subscribe, hit the notification bell, and do all those nice things. And guys, I strongly, heavily would also recommend you go watch ICT videos, because I've noticed, and this is pretty much within my peers, right? Most people do not watch this content, and I personally believe, since he's pretty much the creator of smart money concepts, he has the best way of teaching you how to utilize this concept, if that makes any sense. So with that being said, hope everybody enjoyed the video. Hope everybody found this insightful, helpful, and whatnot. And yeah, man, stay safe.